Hey everyone, welcome back. We're diving into something pretty big today. The US government and a potential cryptocurrency reserve.
Yeah, it's a big one and a lot of moving pieces.
Definitely. And we want to break down what it could mean for you. So we're looking at some expert commentary today to guide us through it.
Right, so it's not just about the government holding on to some Bitcoin they seized or something.
Right, it's way bigger than that.
Yeah, like a way bigger. They're calling it a national digital asset stockpile. But our expert points out there's a difference between a stockpile and a reserve. You know,
Okay, so what's the
well,
difference?
stockpile is just like a bunch of stuff you're holding on to, right?
Okay, it makes sense.
But a reserve that implies strategy, maybe even using those assets to like influence the market.
So that's interesting. So it's not just about holding, it's about potentially doing something with it.
Right, and that's what we need to unpack, like what could they do with it and what does that mean for the rest of us?
Exactly. So let's get into the specifics. What exactly is in this potential crypto stash?
Well, we're talking over $17 billion worth of crypto, mostly Bitcoin.
Wow, 17 billion.
Yeah, and President Trump even mentioned other coins like Ethereum, XRP, Solana, Cardano, all the big names.
Okay, so potentially a pretty diverse portfolio there.
Potentially, yeah. But
Hmm.
Bitcoin seems to be the main focus for now.
Makes sense. So what happened when this news hit the street?
Well, the crypto world kind of went nuts. Just the announcement caused the entire market cap to jump by like $329 billion.
You're kidding. 329
Yeah,
billion.
get this. It happened in just 3 hours.
3 hours. That's insane. So just the news itself had that much of an impact.
Exactly. And that's what our expert is highlighting. It makes you think about how stable this whole system really is.
Yeah, that kind of volatility is definitely a red flag.
Huge red flag. And
Yeah.
it raises some big questions about whether crypto can really be the future of finance if it's that easily influenced.
Right. So what else did the expert have to say about all this?
Well, they pointed out another interesting development on the heels of all this crypto lobbying efforts have exploded like big time.
Really? So people are trying to cash in on this potential shift.
Absolutely. One example, Ripple, a major player in the crypto space, they just made a $75 million contribution to Donald Trump's 2024 campaign.
$75 million. Wow, that's serious money.
It is, and it raises some concerns about conflicts of interest and what our expert calls crony capitalism.
Crony capitalism, what does that mean?
Well, it basically means that powerful financial interests are shaping regulations to benefit themselves. You know,
So the worry is that the government's approach to crypto might be influenced by these big players.
exactly. And that's something we need to keep a close eye on because it could have major implications down the line.
Absolutely. And speaking of regulations, the expert also talked about the whole debate surrounding the IRS broker rule and DeFi platforms.
Right, the broker rule. It's a big one, especially for the DeFi space.
Can you give us a quick rundown of DeFi for those who might not be familiar?
For DeFi stands for decentralized finance.
Sure.
It's basically a way to recreate traditional financial services, but without banks or intermediaries.
Yeah. Okay, so no middleman. Everything happens directly between users.
Right, and it all happens on a blockchain, which is like a digital ledger that's distributed across a network of computers.
Okay, so how does the broker rule fit into all of this?
Well, as it stands, the rule would require DeFi platforms to follow much stricter reporting requirements.
So basically, more oversight from the government.
Exactly, and some people argue that this would stifle innovation and slow down the growth of the DeFi sector.
That makes sense. Too much regulation can sometimes be a bad thing.
Right, it's about finding that balance between protecting investors and allowing innovation to flourish.
Exactly. So what's the expert's take on all this?
Well, they see both sides. They acknowledge the potential benefits of innovation in DeFi, but they also point out the risks of a completely unregulated environment. You know,
Yeah, like what happened with that Synapse case recently.
exactly. That was a major DeFi platform that collapsed and users lost a lot of money.
Right, so some level of investor protection is probably needed even in the decentralized world.
That's the argument.
Yeah,
It's a complex issue for sure.
definitely. And it'll be interesting to see how it all plays out.
Absolutely. A lot of moving pieces in this whole crypto landscape.
For sure. So let's shift gears a bit. The expert also showed a really interesting chart highlighting a trend of central banks around the world accumulating gold.
Oh, yeah. That chart was a big one, and it's been happening especially since the 2008 financial crisis.
So what's the significance of all this gold buying?
Well, our expert calls it a huge red flag. Basically, they see it as a signal that central banks are losing confidence in the current fiat currency system.
Okay, that makes sense. So they're diversifying their holdings, stocking up on gold as a hedge against potential instability.
Exactly, and it's not just a small increase we're talking about. It's the highest level of gold buying since they started tracking this data.
Wow, that's pretty significant. And when you combine that with the fact that the US dollar has lost over 97% of its purchasing power since we abandoned the gold standard, it paints a pretty concerning picture.
Yeah, it does, and it raises some big questions about what the future holds for the dollar.
Absolutely. So if central banks are losing faith in the dollar, what can the average person do to prepare for a potential financial reset?
Well, our expert has some advice for it that they say become your own central banker.
Become your own central banker. What does that even mean?
Well, it means taking control of your financial future, diversifying your holdings, building resilience within your community, and securing essential resources like food, water, and energy.
That's a pretty big shift in mindset.
It is, but it's about recognizing that the traditional systems might not always be there to support us.
Right. So, what does diversifying your holdings look like in this context?
Well, they recommend incorporating tangible assets like gold and silver into your portfolio, especially for securing fixed-rate debt like mortgages and property taxes.
Interesting. So, it's about having a sound money strategy that includes assets that have intrinsic value and aren't subject to the same risks as fiat currency.
Exactly. Gold and silver have been stores of value for thousands of years. They're not going anywhere.
Right? They're tangible, you can hold them in your hand.
Exactly. And they've historically held their value even when fiat currencies have failed.
That's a really important point to remember, especially in times like these.
Absolutely. And, the expert even mentions the possibility of future gold confiscation, urging listeners to research historical precedents.
Really, gold confiscation.
Yeah, it's happened 3 times in U.S. history, believe it or not.
Wow, that's a sobering thought. So it seems like the expert is a big proponent of gold, but what about crypto? We hear a lot about it being digital gold.
Right. The digital gold narrative, it's everywhere. But our expert is a bit more cautious about crypto.
Okay, so what's that take?
Well, they see cryptocurrencies as primarily speculative assets with high energy consumption and limited real-world use cases.
So they're not saying crypto is worthless, but they're saying it's important to understand the differences between it and gold.
Exactly. Gold has a proven track record spanning thousands of years, while cryptocurrencies are still a relatively new and untested experiment.
Right, and it's important to make informed decisions based on your own risk tolerance and financial goals.
Absolutely, and that's what we're all about here, helping you understand these complex topics so you can make the best decisions for your future.
Couldn't have said it better myself. So let's take a quick break, and when we come back, we'll dive into some listener questions and see what they have to say about all of this.
All right, so let's jump into some of these listener questions. You guys sent some really good ones.
Yeah, these are great. So first up, we have one from Wolf, who asks, who is our $37 trillion national debt owed to?
The big 37 trillion. It's a number we hear a lot, but yeah, who exactly are we in debt to?
Right, like where does all that money actually go?
Well, it might surprise you to know that a big chunk of it is actually owed to ourselves, to Social Security.
Really? So it's not just foreign countries holding our IOUs.
Not just foreign countries, but they do hold a big portion. China and Japan being the major ones. But here's something interesting. Our expert points out that both China and Japan have been steadily decreasing their holdings of U.S. debt since 2013.
So they're pulling back, huh? And kind of losing faith in the US dollar, maybe.
Could be. It's definitely a trend worth watching. It suggests that maybe the U.S. dollar isn't as strong as it used to be.
Yeah, it makes you think about what happened when we abandoned the gold standard, kind of like a run on the bank.
Yeah, there are definitely some parallels there. It's a slow burn, but the implications are huge.
Okay, let's move on to another question. This one's from Savannah, and she asks, are we going to be okay? Why is the president not thinking about the working class and the rising prices of goods and services? I'm losing it.
Savannah, I hear you. It's understandable to feel anxious.
Yeah.
Things are tough right now, and the economic pressures are real. But, our experts' advice, it all comes down to this: become your own central banker.
Become your own central banker. Yeah, we talked about that earlier, but how do we actually do that?
Well, it's about focusing on what you can control. Building resilience in your local community, securing essential resources, and creating that sound money strategy we talked about.
Right. Food security seems to be a big focus for them. They talk about things like raising backyard chickens, starting community gardens, even something as simple as sprouting broccoli seeds in your kitchen.
It's a back-to-basics approach, for sure. And it's about diversifying beyond those traditional financial systems, creating a safety net for yourself and your family.
It's about taking control. And speaking of taking control, we have a question from Max who asks, I hear you say be your own central banker, but how does that actually work? What does it look like in practice?
Great question, Max. So one thing the expert emphasizes is converting a portion of your holdings into physical silver.
Physical silver. Okay, so how much are we talking about here?
Well, they suggest basing it on your cost of living and silver's fundamental value. Kind of like figuring out how much silver you would need to maintain your current lifestyle if the dollar were to collapse.
That's a pretty intense thought experiment.
It is, but it gets you thinking about the real value of things.
Yeah.
And they're not just talking about hoarding silver bars either. They recommend having a variety of sizes like pre-1965 dimes, 1-ounce coins.
Mm.
Practical, spendable forms of sound money if a crisis were to hit.
So it's about having options being prepared for different scenarios.
Exactly. And, their team at Zhang Enterprises, they actually offer personalized guidance to help people develop their own sound money strategy.
Oh, that's great. So they're really trying to empower people to take control of their financial future.
Absolutely. Education and awareness are key. Even if you're not ready to invest in gold or silver just yet, learning about these things is crucial.
Okay, let's tackle another question. This one's from Richard. Will a day come when quantum computers break all existing encryption? Will it crash everything?
Quantum computers, yeah, that's a big one. And our expert acknowledges that it's a real possibility. Those things are incredibly powerful. And as technology advances, it's not hard to imagine a future where they could crack the encryption we rely on today.
That's a scary thought. What would that mean for our financial systems, our data privacy, everything?
It's a reminder that we need adaptable strategies. A focus on fundamentals, owning physical assets like gold and silver, which can't be hacked or erased, becomes even more crucial in a scenario like that.
Right, because gold and silver are tangible. They exist outside of the digital world.
Exactly. They can't be manipulated or deleted like digital assets can.
Okay, we have time for one more question in this part. This one comes from low blood pressure. What do you think about gold-backed 50-year treasuries?
Oh boy, gold-backed treasuries. Our expert's response to that one is short and to the point, worthless.
Worthless. Okay,
Uh,
so not a fan then? What's the reasoning behind that?
Well, they argue that unless those treasuries can be easily converted into physical gold at the end of the 50 years, it's essentially just another paper promise.
Right.
We've seen how those play out.
Right, governments don't always have the best track record when it comes to keeping promises.
It's exactly. So they're saying a true gold-backed system would require more than just a vague promise tied to the price of gold. It would need direct convertibility into the actual metal.
So you got to have the real thing, not just a piece of paper that says you have the real thing.
Right. It's about having that tangible asset, something you can hold in your hand, something that has intrinsic value.
Okay, so we've covered a lot of ground here, listener questions. Central bank gold, buying the potential for gold confiscation, it's a lot to process.
It is, but it's all connected.
Yeah.
These trends are all pointing towards a potential shift in the global financial system.
And understanding these trends is crucial for navigating the uncertainties ahead.
Absolutely. We're all in this together, and the more informed we are, the better equipped we'll be to weather the storm.
Couldn't agree more. All right, let's keep this conversation going. We've got more listener questions to get to, so stick around. We'll be right back.
And we're back for our final round of listener questions. You guys really brought it this time, some really thought-provoking stuff. Yeah, our listeners are definitely plugged into what's going on. It's great to see so much engagement with these topics.
Absolutely. All right, let's jump right in. This one's from Clear Skies. When I go to PCGS to check the value of my graded coins, there are two different values listed. What are these values, and which one applies to my collection when I want to sell? Also, the gold coins you encourage us to buy have languished in value. They haven't gone up like bullion. My bullion has doubled while I'm barely breaking even on collectibles bought at the same time.
Okay, so a couple of things there. First, those two different values on PCGS. It's a popular coin grading service. It's probably the difference between what they call sight seen and sight unseen coins.
Sight seen and sight unseen? I haven't heard those terms before. What do they mean?
Basically, it's about the quality and condition of the coin. Sight seen means it's been carefully inspected, verified to meet certain standards for appearance. Those are the types of coins you typically see sold at retail.
Okay, so they're like the premium grade coins.
Right, exactly. And then sight unseen coins, those might have imperfections or blemishes,
No.
Things that make them more suitable for wholesale.
So the price difference reflects that retailers are going to pay more for those top quality coins that they can sell individually to collectors.
Exactly. It's all about the details. Now, as for Clear Sky's concern about those collectible coins not performing as well as bullion, That can depend on a lot of factors, when and where those coins were purchased. Sounds like they might have run into some issues with a previous dealer, maybe one that wasn't offering competitive buyback prices.
Right, not all dealers are created equal, that's for sure.
Exactly. And our expert actually encourages Clear Skies to reach out to their team for a portfolio view. They can help make sure they're getting the best value for their coins.
Good advice. It's always worth getting a second opinion, especially when it comes to your investments.
Absolutely. All right, let's move on to another question. This one's from Live Free. Are silver and gold part of Trump's 25% tariff? If so, will prices on the COMEX go up 25%? Won't the entities with shorts on the COMEX go bye-bye?
Ah, the tariff question. A lot of people are wondering about that.
Yeah, it's a big one. And honestly, it's still unclear whether gold and silver will be included in those tariffs. But there's a bigger point here. The spot price of gold and silver, the one that's influenced by trading on the COMEX, the Commodities Exchange in New York, that price doesn't always reflect the true underlying value of those metals.
Right, we've talked before about how the paper markets can be manipulated and don't always accurately represent their real supply and demand.
Exactly. And if those tariffs do go into effect, it's likely to impact the prices of everything, not just gold and silver. You got to remember, gold and silver are used in every sector of the global economy.
It's all connected, right?
Everything's connected, for sure.
Okay, next question. This one's from Miramar. To the limit of my understanding, the value of cryptocurrencies is based on digital entries in a digital ledger. What is the actual value of these cryptos based on?
That's the million-dollar question, isn't it? What gives crypto its value, unlike gold, which has all those industrial and technological applications? The value of crypto is primarily driven by speculation, a belief in its future potential.
And our expert seems pretty skeptical of that whole digital gold narrative.
They see a parallel between digital gold and what happened with the SDR. The special drawing rights, which was basically an attempt to create paper gold, didn't really work out.
So they're saying there's no substitute for the real thing.
That's the argument. Yeah, gold has a proven track record, thousands of years of history. Crypto is still a relatively new experiment.
Right, and it's important to keep that in mind when making investment decisions.
Absolutely. All right, time for one last question. This one's from No Use for a Name. Is there any gold in Fort Knox? How about in England?
Ah, the Fort Knox question, a classic.
A classic for a reason. It gets to the heart of the matter. Our expert doesn't doubt that there's gold in Fort Knox, but they question its ownership.
Wait, what do you mean, like the gold might not belong to the U.S. government?
It's not entirely clear. There's never been a full transparent audit of those gold holdings. And then you have the whole practice of gold leasing, where central banks lend out their gold to bullion banks. It creates this complex web of claims and counterclaims.
So even if the gold is physically there in Fort Knox, it might not be entirely under U.S. control.
Exactly. And with all these central banks gobbling up gold recently, it makes you wonder, is there even enough physical gold to satisfy all these claims?
That's a mind-blowing thought, and it brings us back to that idea of becoming your own central banker, taking control of your financial future.
Absolutely. It's about understanding the risks and making informed decisions.
So much great information in this episode. I feel like we've barely scratched the surface.
We've covered a lot of ground for sure. The potential crypto reserve, the DeFi landscape, central bank gold accumulation. It's a lot to take in.
It is, but it's all connected.
Yeah.
These trends are pointing towards a potential paradigm shift in the global financial system.
And being aware of these trends is the first step towards navigating the uncertainties ahead.
Absolutely. So here's a final thought for you to chew on. If central banks are hoarding record levels of gold while simultaneously promoting cryptocurrencies, what does that tell us about the future of money, and how can you position yourself to not just survive, but thrive in this changing landscape?
That's the question we all need to be asking ourselves.
Couldn't agree more. Well, that's all the time we have for today, but the conversation doesn't end here. We encourage you to keep exploring these topics, connect with the financial experts we discussed today. Their contact information is available on our website. And as always, keep learning, keep questioning, and keep diving deep. Thanks for listening.